Alphabet's Q1 print just delivered an absolute financial shockwave. Total revenue slammed in an immense $109.9 billion, surging 22% year-over-year and obliterating street estimates. Search anchors this cash-printing empire at $60.4 billion, proving AI overviews are highly monetizable. YouTube adds a heavy $9.9 billion, but the real hypergrowth is breaking outside of ads. Subscriptions exploded to $12.4 billion, while Google Cloud crushed a historic $20 billion milestone, fueled by massive enterprise AI workloads. Flowing through the operational pipeline, a ruthlessly weaponized $17 billion and AMP winking and laughing budget still yields a towering $39.7 billion operating income. But here is the ultimate mic drop, amplified by $37.7 billion in unrealized equity gains. Net income skyrocketed to $62.6 billion. That prints a $5.11 EPS, annihilating Wall Street's estimate by a terrifying 90%, cementing Alphabet's status as an absolute, unstoppable juggernaut. Tracking the historical progression, Alphabet has systematically transformed a $68 billion base in fiscal 2022 into a $109.9 billion titan today. Analyzing the specific growth rates reveals a massive structural shift. The legacy Google network is actively contracting at negative 3.9% due to privacy barriers. But the core pillars easily absorb this. YouTube ads are growing at 7.9%, while search maintains a relentless 11.1% expansion. The true hypergrowth is exploding in the expansion tiers. Subscriptions and platforms are surging at 16.2%, locking in highly lucrative recurring cash flows. And the absolute crown jewel, Google Cloud, is printing an explosive 36.3% segment growth, violently expanding its total footprint. Alphabet is sustaining a massive double-digit compound annual growth rate, compounding aggressively across every single front. This is the precise architecture of an AI monopoly. Starting with cloud, $20.03 billion in revenue, $6.6 billion in operating income, and an impenetrable $460 billion contract backlog. Moving to search, generating $60.4 billion while slashing latency by 35%. AI mode is locking users in for 49 seconds per session, spiking to a massive 77 seconds for high commercial intent. Next, subscriptions, hitting 350 million total users, adding 25 million this quarter alone, with Shorts driving 10 million daily upload channels. The AI infrastructure is running red hot, backed by $35.67 billion in CapEx, processing 16 billion tokens a minute while slashing core AI response costs by 30%. Finally, Waymo, reaching a $126 billion valuation, executing 500,000 weekly rides with 92% fewer severe accidents. Absolute dominance. The global digital advertising battlefield is brutal, but a definitive duopoly controls the territory. Alphabet commands the absolute apex with $229.4 billion in total ad spend, driven by the massive scale of Google and YouTube. Meta is fighting a fierce battle right behind them at $220 billion, leaving Amazon, ByteDance, and Microsoft fighting for the remaining scraps. Analyzing the macro trend, the total global digital advertising market is exploding from $328 billion in 2019 straight toward an estimated $944.4 billion by 2027. Despite the intense emergence of TikTok and Amazon ads, Alphabet's dominance remains highly resilient, locking in a massive 26.4% share of the entire global digital economy in 2026. Welcome to the engine room of the internet. Google Services is undergoing a profound structural pivot. The financial performance is undeniable. $89.63 billion in total revenue and a massive $40.58 billion in operating income, expanding 24% year-over-year. But the real revolution is in the AI search economics. Traditional search is evolving into an autonomous machine, with AI deep research and brand comparisons keeping users locked in longer. The cost to serve GenAI responses has plummeted by over 30%. Now, analyze the Universal Commerce Protocol. Alphabet is annihilating the friction between discovery and purchase. By integrating real-time inventory tracking, dynamic pricing, and frictionless checkout via Google Wallet, they are aggressively shifting from basic cost-per-click models to highly lucrative cost-per-action transactions. Meanwhile, YouTube is executing a ruthless pivot toward the $180 billion global TV ad market, actively embedding into smart TVs to capture premium multinational brand budgets, building a fortress against the intense competitive pressure of short-form digital opium. The battle for the living room has a definitive winner. Tracking the share of U.S. TV screen time, digital streaming is accelerating on an unstoppable upward trajectory. At the absolute foundation, YouTube is crushing the legacy media complex, systematically expanding its grip from the 8% range straight up past 13.4% of total viewing time. Netflix fights a fierce battle in the 8% tier, while Prime Video, Hulu, and Disney Plus hover in the lower single digits, battling for the remaining primetime hours. Linear television is collapsing, and YouTube is swallowing the broadcast industry whole. This is the blueprint of a trillion-dollar intelligence monopoly. The financial commitment is awe-inspiring. An upgraded projection of up to $190 billion in AI capital expenditure for fiscal 2026, backed by a fortified balance sheet and heavy debt restructuring. This massive hardware deployment translates directly into commercial dominance, securing an impenetrable $462 billion contract backlog. The Gemini ecosystem is scaling violently, with a staggering 800% surge in generative AI revenue and massive adoption across enterprise users. But raw compute requires absolute security. Enter the agentic defense architecture, fortified by the monumental $29.5 billion acquisition of Wiz. This system deploys a triple agent shield, red attackers, green fixers, and blue defenders, neutralizing global cyber threats in a mind-bending 22 seconds. Empowering this entire civilization-scale infrastructure, a $5.9 billion commitment to 10.8 gigawatts of clean energy, ensuring Alphabet possesses the sovereign power grids necessary to train the next generation of artificial superintelligence. The cloud infrastructure market is an absolute bloodbath, within a massive $129 billion total market, surging 35% year over year. AWS clings to 28% and Azure holds 21%. But the apex predator is Google Cloud, violently capturing 14%. Tracking the historical trend lines, AWS has experienced a slow, structural bleed, while Azure maintains a steady, elevated trajectory. But the momentum line for Google Cloud is undeniably accelerating upward, fueled by their exclusive TPU architectures and soaring enterprise adoption. Google Cloud isn't just defending its territory, it is violently stealing market share and rewriting the hierarchy of the cloud infrastructure market. Wall Street doesn't just buy the present, they buy the future, and Alphabet's 2030 roadmap is pure science fiction turned reality. The master plan begins with Project Astra, achieving universal AI with sub-300 millisecond latency and persistent visual memory, all powered by the revolutionary 3-nanometer Tensor G5 chip. Parallel to this, quantum computing is breaking the laws of physics. The Willow chip reduces error rates to microscopic levels, executing complex sampling tasks in 5 minutes that would take classical supercomputers eons to solve. In the physical realm, embodied AI and robotics, driven by the Gemma-4 model, are achieving near-perfect high-precision manipulation through continuous data flywheels. Waymo is transitioning from a science experiment to a global utility, targeting 1 million rides per week and aggressively expanding into international megacities like Tokyo and London. Underpinning all of this is the sheer hardware muscle. The next-generation Ironwood TPU v7, delivering unimaginable compute, completely powered by massive 10.8 gigawatt clean energy acquisitions. To forge a war machine, you must ruthlessly cut the fat, analyzing total operating expenses, which stand at $28.9 billion. The discipline is surgical. General and administrative costs are starved down to just 6%, or $4.3 billion. Sales and marketing are executing seasonal declines, dropping to 7%, or $7.6 billion. Why? To fiercely protect the ultimate weapon, a massive 16.9%, $17.0 billion research and development budget. They are systematically squeezing administrative bloat to fund the continuous heavy artillery execution of their AI infrastructure. This is the definition of an absolute financial shockwave. Tracing the performance from fiscal 2022 onwards, Alphabet's revenue engine executes a relentless, multi-year expansion, smashing straight past the $100 billion threshold. Historically, the net income margin hovered safely and predictably in the 20 to 30% zone. But Q1 2026 shatters every known paradigm. While total revenue hits an immense $109.9 billion, net income violently decouples from all historical norms, exploding to an astronomical $62.6 billion. The profitability margin completely detaches from reality, striking an unbelievable 57%. Fueled by a massive injection of unrealized equity gains. This is one of the most extreme profitability shocks in modern corporate history. The era of missed targets is utterly dead. Look at this relentless execution staircase. Quarter after quarter, Alphabet systematically underestimates and violently overdelivers. Pushing past the historic $100 billion threshold, they just vaporized Wall Street's $107 billion consensus by printing a massive $109.9 billion. Financial networks and industry trackers confirm this isn't just organic growth. It is fueled by a global compute shortage where Alphabet now wields massive pricing power. Driven by this Agentic AI supercycle, forward projections show this momentum accelerating straight into the $134 billion stratosphere. This is the profitability shock that forced the financial elite to completely tear up their valuation models. Historically, earnings per share demonstrated a steady, predictable expansion. But Q1 fiscal 2026 triggered an absolute financial earthquake. Analysts conservatively modeled $2.68, but Alphabet unleashed a towering $5.11. Market intelligence confirms this massive 90% beat was heavily amplified by a $37.7 billion unrealized equity gain. But make no mistake, even stripping that away, the underlying operational leverage from their cloud ecosystem is printing pure, unadulterated cash. The market is an absolute capitulation, scrambling to catch up to this juggernaut. Tracing the historic consolidation phase, the stock has launched into a fierce, vertical breakout. Look at the consensus forecast. The battle lines are drawn, but the bears are utterly annihilated. Out of 73 analysts, 57 are screaming strong buy with 0 sell ratings. The bulls are charging toward a maximum target of $500 per share, a massive 30% upside. Leading institutions like JP Morgan have aggressively upgraded their targets to $460, pricing in the explosive cloud growth. The only friction holding the minimum target at $311 is the lingering threat of DOJ antitrust remedies and European regulations. But the trajectory is clear. Alphabet is forging the sovereign infrastructure of the AI era. A quick reminder, the views expressed in this video reflect opinions at the time of publication and are based on sources believed to be reliable. This content is for informational purposes only and does not constitute investment advice. If this deep dive gave you the edge, hit like, subscribe, and drop your verdict in the comments. Thanks for watching, and see you on the next one.